Hello, welcome to Forex School Uganda. I am Godfrey. If you're new to the channel, kindly subscribe, like and share the video. Today I want us to do a quick recap of the EURGBP trade that we took last week. I had done an analysis earlier and posted it on the channel for anyone who wanted to take advantage of it. But today I want to show you how you too could have taken advantage of it. I was able to trade the setup. I was able to bag some pips and money off it, but I want to show you how you too could have taken advantage of the analysis that I've made, so you could also have made money in the market. And this is the analysis that I'm talking about. This is the video that I'm referring to. This right here, the EURGBP pre-market analysis and weekly forecast of 8th to 12th July 24. This one right here, that's the analysis that I'm talking about. And so the trade that came off it is what I want to do a recap of. And I'm going to leave a link in the description of this previous video that I'd made, so you can go back and rewatch it. But we had looked at the monthly, and the monthly was heavily bearish, with price dropping heavily to the downside. And we had said we expected price to come and fill this week. That had been formed with the previous candle, and we expected this new candle to fill it up as it moved to the downside. So it was a weak fill that we were expecting on the monthly, and so our monthly bias was bearish. Going down to the weekly time frame. Now on the weekly time frame, we are going to do a bar replay because this current data hadn't played out yet, so I'm going to remove it so you can get a clear understanding of exactly how this all happened. Now, this is how it was at the time we did the analysis, and this is the weekly time frame. And we had seen that this was a support area that had been made by price, and we saw price break impulsively below it to the downside. Now, when support is broken, it becomes resistance, and we saw price retrace to retest it, and with this bearish candle that had a long rejection wick to the upside, it was able to retest this area. This area held and drove price back to the downside, having this weekly candle close as a bearish candle. And so this was the completion of the impulse and correction phase in the market. And after the impulse and correction, what do you expect? We expect another impulsive move in the market to complete the impulse correction impulsive move in the market. And so we expected price to drop from here to the downside. And also you can see clearly that this was a bearish close after retesting this resistance area, confirming that further bullish moves had been rejected, and now price was in the phase of a potential bearish move to the downside. There's so many things that you consider when you're doing your analysis. First of all, you look at the higher time frame perspective. Then secondly, you look at market structure. Then thirdly, you also have to look at the price patterns in the market. Then the candlesticks formations to give you a complete understanding of the technical aspect of the market. Then you also consider the fundamentals, but all those details I'm not going to go into. But you need to be keen at paying attention to the full details that the market presents to you before you make a decision. And so dropping to the daily time frame. In this daily time frame, we had seen price break and close below this support area, and it also had left behind a wick that we anticipated price to fill to the downside, that it would act as a draw on price to drop to the downside to fill it, because it wasn't rejecting, it hadn't yet touched this support area, and so we couldn't say that it was a rejection wick. And so that wasn't a rejection wick in our anticipation. It was just a wick that had to be filled. Also notice something here. Price, after moving impulsively to the downside, it started moving in a corrective phase right here, leaving behind what appears like a bearish flag pattern. And so a break out of it would add more confluences to price further dropping, or to our bearishness or the bearish bias, and so we would expect price to break below this, come retest this area, confirm to us that the break is not fake or that it's not a false break. And so after the retest of this, should it confirm to us that the break is for real, then you would look to take sales to the downside. And so we'll look at the 4-hour time frame. Now this is the 4-hour time frame, and we had seen that price had broken below this support area, but had again retraced to retest it and had closed back above it. And so now we couldn't take any sales at that point. Why? Because it had broken back above the range which we were looking to take sales from. And so we were waiting for price to break back below and close below this support area. And the reason was we wanted this support to turn into resistance to add to our confluences, set of confluences, as well as help our confidence in taking sales to the downside. Now after the break below, we expected price to retest this area, and that area, that same area, we expected it to first hold and confirm to us that the break is actually real and it's not a false break, and from then we would comfortably take sales to the downside. Now that was one way of trading this. Now the second way was, should price break and close below this area? If the break is good enough, then we could set sell limits in this area and wait for price to retrace to that sell limit order, trigger us in, and down we go with the price banking some good profits for that particular trade setup. Now also notice something here. Price had formed what we know as a head and shoulders pattern, which is a bearish price pattern in the market, and so this also was added to our set of confluences to further inform our bias as bearish. So we'll see how this played out and how you could actually have looked to take advantage of the analysis. I was able to capture this trade and was able to bank some money on it, but I want to show you how you too could have taken advantage of it to make some money from the market that particular week. And so we'll play this forward. So this was the big break that we wanted. You can see it broke down and left behind a wick that you could have anticipated price to fill. But now we wanted price to retest this area for our entries before a drop to the downside. And so you would set limit orders here, and that would be a sell limit with a target being down here, but the ultimate target being on the weekly time frame. Let's check it out. So this is the weekly time frame, and of course your target is down here, but ultimately the ultimate target would be at the minus 27 Fibonacci extension area, which is this point right here. And so let's go back down to the 4-hour. That is the trade setup. So basically that's the trade setup that we are looking at, and the target is down here, and that's for a 4.4 reward for the risk taken. Now the 4.4 reward means that for every dollar that you are risking, you're targeting 4 times as much as you have risked. So if you're risking $1, you're targeting $4. If you're risking $100, you're targeting $400. If you're risking $1,000, you're targeting $4,000. So let's play it out and see how this actually turned out. Right there. So this was the trigger candle. This right here was the trigger candle. Came, and that's the point. It would have touched your limit sell limit order and triggered you into this sale. Right there, you would have bagged 4 times as much as you had risked. Now I wasn't looking at this area here. Why? Because this was good enough for me. And remember, the money you count is that which you have already closed out from the market. If the money is still in the market, your trades are still in, you do not count that as profit already made if the trade is still running. So it was only prudent for me to cash out much earlier before market would behave any other way contrary to what I had analyzed. And also, rather than give back my profits to the market, this area here was good enough for one to take their profits off the table. Okay, right there. Price hasn't yet reached this ultimate target, but we are out of the trade, and this 4.4 risk reward ratio is good enough on any day, at any time. So that's how you could have taken advantage of the analysis that I've done earlier in the week and bagged some pips from the market. Hopefully you learned a thing or two as far as understanding price movement from the higher time perspective down to the lower time frames. Remember, there's so many things that we look at when it comes to trading the market. First of all, we do a top-down analysis. We look at market structure from the higher time frame perspective. Then we look at the technicals, fully all the technicals, and that includes the price patterns as well as candlestick formations. Then we also look at the fundamentals, and we look at the confluence of them all together to inform our trading decision, because trading is not gambling. Trading is serious business, but you need to know what to do and exactly how to do it. Now keep it on the channel, as I'll be dropping some more nuggets every once in a while to aid you to come to know exactly what to do and how to do it. This is an educational channel to aid you in your trading journey. And so if you're new to the channel, kindly subscribe, like and share the video as well. And you also remember to click that bell icon to be alerted every time new content is posted on the channel, so you can check it out at its earliest, just in case there's a setup that you could take advantage of and make some money